Here in 2017, it's pretty easy to make the case that our financial markets are dangerously overvalued. The stock market is hovering near its all-time high. And not only are prices at record levels, but the price-to-sales ratio for stocks is higher than it has ever been by a lot. Investors are paying a higher price for sales than they ever have before, an important warning sign that the stock market is overvalued. And over in the bond market, we find that over a half-decade of near-zero interest rates, bond yields have dropped to unprecedented lows. Given the inverse relationships between yield and price, that means bond prices are valued higher than they ever have been, another cautionary sign of bubble pricing in the markets. And last, in the housing market, we see that not only has the median U.S. home price fully recovered from the Great Recession, but it's powering to all-time highs just as stocks and bonds are. Mind you, this is happening while the real median income in America has been on the decline since the year 2000. This is a telling sign that home prices aren't inflating due to an increase in prosperity, but rather some form of bubble economics. So we're seeing clear warning signs of overvaluation across stocks, bonds, and housing. What's going to happen to the capital invested in those markets once they start to crash? In times of market turbulence, investment capital seeks safety, a place where it can preserve its purchasing power and ride out the storm. So, in an environment where stocks, bonds, and real estate are all at risk, where are the safe havens where capital can seek shelter? Historically, the precious metals, notably gold and silver, have offered protection. In the new digital era, cryptocurrencies such as Bitcoin promise to play a similar role. Heck, even withdrawing cash from the bank and putting it under your proverbial mattress is not an option to be lightly discounted at this point. The purpose of this short video is not to make the case for these safe haven assets as wealth protection vehicles. We've done that on numerous occasions at the Peak Prosperity website. Rather, the intent here is to show you how small these safe haven markets are. When capital starts fleeing from stocks, bonds, and housing and into safe haven assets, the prices of these safer assets are going to explode higher in price simply out of mathematical demand. So what do I mean by small? Here's the size of the Bitcoin market. All the Bitcoins circulating today are worth around $17 billion. The same is true for the market value of all of the world's above-ground silver. That too is around $17 billion at today's spot price. But both of those are dwarfed compared to the amount of physical currency, banknotes and coins, in circulation around the world. This is the cash the world could collectively stuff under its mattress. The amount of all the gold ever mined in the world is about 60% greater than that, nearly $8 trillion at today's spot price. Okay, so those are the sizes for many of the world's leading safe haven markets. Now here's where things get interesting. The value of all the publicly traded stocks in the world is somewhere around $70 trillion, nearly 10 times the size of the gold market. And the market for the world's debt totals over $200 trillion. Note that that's just debt. It doesn't include the unfunded national entitlement programs around the world. And lastly, just for fun, let's take a look at the estimated size of the global derivatives market. Derivatives are bets that get made every day across the global financial system. Futures contracts, options, credit default swaps, and the like. By the way, failing derivatives contracts were the trigger that set off the 2008 financial crisis. The current world derivatives market is estimated to be nearly $1 quadrillion in size. And that's not even the high-end estimate. Now assume for a moment that the asset price bubbles in stocks, bonds, and housing start to deflate. If the investors in those markets want to put their money somewhere safer instead, what's going to happen? Well, for starters, the prices of the precious metals and cryptocurrencies are going to have to go much, much higher. By intent, there is a limited supply of those assets. So simple math tells us that competition for those finite units is going to bid up pricing. Remember that the silver market for above-ground silver is $17 billion. If just 0.01%, 1/100th% of the capital held in the global debt market shifted over to silver, its price would have to more than double. Think about what would happen if 0.5% shifted over, or a full percent. For sure, were this to happen, not only would the price of silver appreciate quickly, but you'd likely have difficulty finding anyone to sell any to you. All of the ounces in such a tiny market would likely be held in the tight hands of the small number of investors who managed to buy early. The message here is that the market is giving us clear warning signs that investment capital in the major markets is likely to experience a punishing correction in the coming future. Prudence dictates considering moving at least some of that into safe haven assets. But more than that, given the much smaller size of the safe haven markets, it's important to move your money into them before a crash arrives. Otherwise, you risk having to pay much higher prices for safety, or perhaps having missed the window to move your money into these markets at all.